My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'll be one of my friends just trying to make some money. My job, not just entertainment, to educate, teach you, put days like this in perspective. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Nice, mean, I don't care. Eternal or not, hope actually sprung this week, and you owned hope. If you own stocks, instead of dumping them into the misery of the week before, this week was a huge boost to your portfolio, with still one more terrific rally day. Dow gaining 274 points, the S&P jumping 1.17%, and the Nasdaq surging 2.05%. This week is the perfect reminder that you can't afford to flit in and out so easily. Sell. You can't just say, you know what, I'll sell everything and get back in when things are better. Remember, I told you that all week. When you do that, you end up missing a week like this, which is about as big as it gets. There's always a major reason I'm always telling you to stay the course, even as so many other commentators want you to head for the hills. Sell. It's why I presented constructive work from some of my favorite chartists this week, because they're unemotional about the state of the world. The charts have no feelings. More on that later. Remember, most of the big gains each year happen on just very few days. You have all these trading days of the year, but most of the gains occur in a cluster, and then they're over. So we must ask ourselves, will that be the case next week? Let's take a look at our game plan. All right, we start Monday as we started every Monday since the Russian invasion of Ukraine, with a slim, small hope that there's some success in the peace talks. So far, so bad. And I don't see why anything will stop Putin's advance, except maybe Mother Nature, which could make it too rainy for him to bring in the new equipment he needs if he wants to start leveling major cities. That's actually true, by the way. It's hard to imagine that sanctions alone will bring him down, but this was supposed to be a short, victorious war for Russia. So the longer it drags out, the worse it'll be for Putin's regime. I know each week can be different, and we've no longer oversold in the S&P oscillator. I just checked. So it's so different from last Friday, huh, after the remarkable run. But we won't have to wait long to find out if things are going to continue, because we have a big company that reports after the close. Dow Jones, Bellwether, Nike. And I've got to tell you, I think the quarter is going to be complicated by myriad issues, mostly involving Chinese spending. I know the Chinese stock market was good, but are they buying things? I don't expect Nike will actually have good numbers, but that's now the conventional wisdom, which leaves open the possibility of an upside surprise. All right, Tuesday. Once a year it happens. Once a year. Tuesday, CEO Jensen Huang, keynote at GTC. Tuesday's huge. This is the man I call Leonardo da Vinci. He's the CEO of NVIDIA, and he speaks at this conference for developers. I know this sounds like pure idolatry. I mean, whoever would name their dog after a company? But, well, this speech will define where tech is, where it's going, and what are the boundaries that must be smashed. And he'll smash them. Now, here's what I do. I watch it live, first of all, and then I watch it again. And perhaps because I'm just not smart enough, I watch it a third time. I am not at this man's level. Actually, no one's at Jensen's level. Even though he speaks in plain English, it's very hard to grasp what the future really looks like. The fact that he's fun, that he has a zest for life, and he's kind, and a personality, all of it will come across. I need you to watch this. Jensen doesn't make you wish that you were smarter. He does make you wish you were more curious. I find him amazing. His thinking should define your thinking. It's how I get some of my best tech ideas. After the close Tuesday, we get an incredibly important quarter from Adobe, also one of my favorite software companies, filled with creativity, as a CEO who understands how the web is a force of democratization that inspires people to tell the stories they know. Remember, we're all storytellers. We all have stories. Adobe lets you tell them. Adobe's got a real sense of purpose, which is unusual. Right now, the long knives on Wall Street are out for them, with several analysts saying there's limited upside to the quarter. I think it'll be better than that, but the standards have gotten ridiculously high for this fabulous company. Wednesday, we find out if the market has an appetite for other food stocks besides the incredible Hershey's, which is amazing stock. when General Mills reports. Mills has a storied career, but I think it's no longer the Mills of old. It's become way too episodic for my taste. My view, the food stocks are a diminishing group. Why? Well, they're hurt by inflation in every part of their manufacturing chain. A lot less defensive than they used to be. After the close, we hear from KB Home. Now, I keep waiting for a home builder that says, you know what, we have slack in demand because interest rates have gone higher. Mortgage rates are now 4%. It sure has not happened yet. Given that Lennar talked a very good game about how the world's shaking out right now, and that was a very good conference call, by the way, I bet KB Homes blows away the numbers and even gets some recognition for doing so. As for the response to higher rates, they'll probably predict that demand remains rabid for homes in California. All right, next up, a little curious, I know, Ollie's Bargain Outlet Holdings. Now, I am a proud member of Ollie's Army, meaning I belong to a club that gets special deals from this down and dirty outlet chain, one that sells markdown merchandise that is basically offloaded from other retailers that need cash that Ollie's has. And they buy the stuff for next to nothing, and they sell it to you for a little next to nothing. Now, speaking of bargains, I just bought a terrific book about the last days of Nazi Germany for under $1 at Ollie's. Even though it was water-warped and could have doubled as a door jamb, I think it was a bargain. The key thing for Ollie's, how do you think I made money? Wait, by going buying books full-time on Amazon? I go to Ollie's. Anyway, it's whether they can get their hands on enough inventory. I mean, they exist to take unsold inventory from other retailers. But what happens when consumers are willing to pay full price for pretty much everything and there's nothing to sell? Well, maybe you go get water-damaged books, right? Bad news for Ollie's Army. Next up, earlier this week, we went to see Steve Squeri. Remember, he's the excellent CEO of American Express, who talked about how people are going out. And again, they've been cooped up for ages. Now, I want to know, are they going to Capitol Grill? Are they going to Olive Garden? Are they going to Longhorn Steak? We'll find out when parent company Darden reports on Thursday morning. Stock's been acting a little funky lately. Given that they have all different demographics attending, it gives you a fabulous sense of where we are. I had a really good brunch at Longhorn recently. They have killer just absolutely killer Bloody Marys. I'm not kidding. I mean, my wife doesn't even like them. She tried one. After that Baconator thing, I shouldn't have mentioned that. We'll take it out in post-production. Friday, we get the Michigan Consumer Sentiment Report, and I'll be glued to this one because the level of dissatisfaction with this country seems mighty high. This is an important number for Jay Powell because the desire of Americans to spend their darn fool heads off is surely waning. I regard this number as a great arbinger of Home Depot and Lowe's, as we'll soon turn the page to gardening and outdoor living season. And I'll tell you, that gardening season is like Christmas for them. And if things are gloomy, well, their numbers won't make it. By the way, I still like Lowe's really much. Now, after this huge week, it's normal to expect some profit taking. So it wouldn't surprise me if we have some bitter days ahead. I need you to steel yourself. But I will say this. After the gains we've had this week, you got to go over your portfolio. The dip buyers, or at least the few left, the ones so disdained by professionals, they might be back, knowing the Fed is a month away, but you don't have anything of consequence until another week's time. But here's the bottom line. If you still own the stocks of unprofitable companies that don't even have any good cash flow and sell at high price multiples to sales, I'm begging you to use this chance, started by today, to do some selling and reposition yourself into more tangible companies with much cheaper stocks that I will give you in tonight's show. I'm going to give them to you. But if you own good, profitable companies, buckle up. It's your time. Let's go to Derek in California. Derek!
Booyah, Jim. First-time caller, long-time listener. You're
I like
a national
those.
treasure,
I like
sir.
the first-time, long-time. That's what they call them, guys. First-time, long-time.
Right. Earlier, you were discussing Northrop and LMT and Raytheon, and you said LMT had the shoulder fire. I recently heard a report saying that the military is going to be spending 35% less on the F-35. Jim, how do you feel about ticker symbol LMT?
All right, look. Sometimes you have to look at these companies. You have to say, who is the CEO? And the CEO for that company is Jim Takelett. Remember him from American Tower? When that stock was at 50, he came to me and said, listen, there's people betting against me, making up lies, doing this and that. You know what? He's darn right. I think Lockheed Martin's a buy. I want to go to Bo, who is in Florida. Bo.
Booyah, Jimmy. I hope all is well, my friend.
It's not bad, actually. It's not bad. I'm going to be hanging with my daughter this weekend. We're going to be streaming. You know what people do. We binge, but just on product. Look, we're thinking about looking at the Theranos thing. It looks good. All right, what's up? What's up?
So I've got a problem, Jimmy. My girlfriend will not stop begging me to buy Lululemon. I mean, honestly, it's getting ridiculous. She's got the Lululemon leggings. She's got Lululemon golf outfits, Jim. She doesn't even play golf. They're coming out with this new shoe line, and, Lululemon being down 33% from its highs. 47 PE. I think it's a great company. I remember when it was in the 70s, I was like, man, I should have bought it then. Coulda, shoulda, woulda. What do you think about it now?
Have you thought about counseling? I think this is a tough one. That you could go together, you could go separately. Lulu is very hard. It's an expensive stock. But I will tell you this. I believe in Calvin McDonald. I think that she's right. I'm sorry, man. You're on the wrong side of this trade. Bo, as they say, doesn't know. Hope springs this week. No doubt about it. After Big Moose Horror, I wouldn't be surprised if there's some prize profit taking. But next week, it's my favorite week of the year. Other than like my anniversary and stuff, or like my wife's birthday. This is the real deal. All right, so I'm urging you to do some selling if you own some of the stocks that are unprofitable companies that moved up this week. But I'm going to give you a good one tonight. A company called Vacasa. I didn't know them either. Give us guess a taste of paradise, but could paradise bring profits? I'm checking in. This is like an under $10 stock, man. Off the charts, it's becoming a Cramerican favorite. I'm checking in on some of the old favorites with another guy who's so right, Larry Williams. You're going to do exactly what he says. And it's not just because I'm Svengali. And there have been a host of new listings over the past year. Which of them actually have some free cash flow and are not a bunch of jokers you got to stay away from? I'm going to give you my favorites. So stay with Jensen and stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.